Today, we're going to reveal some of Michael Burry's deleted tweets from a few days, weeks, and year ago. We managed to save them before deletion. Now, for those that don't know, Michael Burry is one of the most infamous investors that's accurately predicted several major market bottoms and tops. He's predicted the 1999 dot-com bubble, the 2005 housing bubble, and the COVID bottom. There was also a Hollywood movie made about him called The Big Short, where Michael Burry was played by Christian Bale. Now, let's get us in on some major information through Twitter, including several recent ones saying that the, quote, mother of all crashes is coming. Keep watching to find out more on his deleted tweet and the crucial information that he shared. Our first important tweet we snagged from Burry was posted at some point last year, where he comments on the greatest speculative bubble of all time. People always ask me, what's going on in the markets? It's simple. Greatest speculative Bub X bull of all time in all things. By 2 orders of magnitude, hashtag FlyingPigs360. What this tweet is making reference to is that there is an insane amount of speculation. In fact, it's the most we've ever seen. For those that don't know, speculation is the act of speculating what the market is going to do. In other words, it's like gambling money on whether the markets will soar into new highs, crash and burn, or will remain in a neutral territory. What Burry is saying is that this speculation is happening not just in the niche markets like altcoins or cryptocurrencies. These are cryptocurrencies that are outside the major cryptos like Bitcoin or Ethereum, or micro-cap penny stocks. These are businesses that are often just starting and have very little capital, thus very risky. But rather, he's saying that in all markets, there is a massive number of people speculating. Essentially, the prices that we're seeing of major companies are severely overvalued, meaning that the current price is not reflective of their current earnings and profits due to over-speculation. The way this works is that people are basically overlooking typical factors which go into selecting a company to invest in and simply jumping on the bandwagon of price movements. When a bubble pops, it can be extremely startling. It's no different when a great bubble of the magnitude that Burry forecast pops too. At some point last year, Burry tweeted, but since deleted, quote, all hype/speculation is doing is drawing in retail before the mother of all crashes. Hashtag FOMO, parabolas don't resolve sideways. When crypto falls from trillions or meme stocks fall from tens of billions, hashtag Main Street losses will approach the size of countries. History ain't changed. Whenever you imagine a bubble that constantly has air being blown into it, do you think that the bubble will pop or deflate at a smooth and natural pace? It's of course more likely that the bubble will pop. So, using this same analogy, with the ever-expanding speculative bubble forming, the chance of it popping is very likely. To say it another way, whenever you throw a ball into the air and it reaches its maximum height, do you think that the ball just stays at that maximum height and slowly levels out in one place? Absolutely not. What it does is it eventually drops just as quickly, and sometimes even faster, than on the way up. For those that remember their high school math, a parabola can't be a parabola unless it moves both up and down, which is what Burry means by parabolas, so they don't resolve sideways. There was no shortage of people hopping on the crypto bandwagon, and especially those that had no idea what crypto is, and Burry made sure to tweet that. At some point last year, Burry tweeted and deleted, quote, the problem with hashtag crypto, as is most things, is the leverage. If you don't know how much leverage is in crypto, you don't know anything about crypto, no matter how much else you think you know. The truth of the matter is that Burry was right on with what would happen to crypto and with everything else. For reference, Bitcoin has already dropped by 70% from its most recent highs, and when it comes to leverage, it's a two-sided sword. In traditional terms, leverage is when you're loaned capital to invest from a broker in whatever vehicle that you want, so that way you can purchase more of that specific vehicle than you're actually able to buy. For example, let's say you wanted to buy one Ethereum coin valued at $1,000, but you've only got $500 in your account. Fortunately, your broker provides 10x leverage on your account. This means that for every dollar you put into buying an Ethereum token, the broker will loan $10. Essentially, this means that your $1 is equal to $10, or your $500 is equal to $5,000. So you would really only have to use $100 out of your $500 to buy one Ethereum coin. We're sure you can see how lucrative this is, but it's also dangerous for your pockets if you speculate wrong, and for the general market if people pull their profits too quickly. Just like in 1929 during the Great Depression, whenever banks and brokers over-leverage, the chances of them not being able to pay everyone back increases massively. What happens when you end up shaking a soda bottle? It explodes due to the fact that the gases are waiting to escape. On June 13th, 2022, Burry had tweeted and deleted a very similar situation with the stock market. Quote, "The theater took more than a decade to overstuff. Not likely everyone gets out in less than a year." Here, Burry uses the analogy of how it's extremely difficult for people to get in and out of an overstuffed theater during emergency, like a fire, in a short period of time. Unfortunately, there will be many people who won't make it out. To apply this analogy to the markets, Burry is saying that over the past decade, many people have flocked into the stock market and it's overcrowded. With the imminent crash coming, it's going to be hard for everyone to get out unscathed, and it's likely that many people will lose a lot more than they had wished. If we continue this analogy for the stock market, then if you're going to try to sell your shares, then you have to find someone who's wanting to go into that theater to be able to take your seat while it's on fire. And the chances of that happening are pretty unlikely. Are you enjoying the video so far? Well, don't forget to like and subscribe, as it means a lot to us. For those that have tried forecasting anything, it's pretty easy to totally miss the mark. However, on June 13th, 2022, Burry tweeted and deleted this one. Quote, "Just getting one thing right is hard. 1999 tech bubble, 01 to 05 value revival, 2005 housing bubble, 2009 almond farms, 2020 COVID bottom, 2020 lockdown horrors, 2021 meme stocks, 2021 crypto leverage, 2021 inflation, 2022 not done yet, late 2022 question mark. In case you didn't know, these are the things that Burry forecasted correctly. However, not everyone can be right, at least with their timing. Burry has even said it himself that his timing can be off and he can be early with his estimations. The truth is that we simply don't know what the future holds and what sudden changes may occur. There has been no shortage of volatility in the markets as the Fed has been increasing interest rates. And on June 11th, 2022, Burry tweeted a deleted quote, "Transitory, no. Peak, no. To the moon, question mark? If you mean a cold, dark place." The CPI news this morning was so awful that it changed the bond market's view of Fed trajectory, and the weakest sector broke. In bond jargon, MBS went no bid, no buyers for MBS. For those that don't know, this was the day that the US released its inflation data, and yet again, another record was broken for the highest inflation rate from year to year. Now here are a few jargon acronyms, words that can easily go over someone's head if they don't know what they mean. Understanding them will help to make this tweet a little bit easier to read. Firstly, CPI is known as Consumer Price Index. This is an index that measures how prices change over time by using what's called a basket of goods and services. For example, the government will take a basket of regulatory grocery items that the average American will buy. Things like fruits, veggies, meats, dairies, and so forth. The next year, they will end up checking the prices of those exact same things in the basket that they've created to see how the matching prices stack up. So, saying that the CPI news was awful is saying that the basket of priced goods is much higher than it's ever been before. The MBS is also known as a mortgage-backed security. These are bonds that are secured by home and other real estate loans. In other words, an MBS is a bundle of home loans bought from a specific bank, which issues them and offers them as an individual security for those that are looking to get their hands on real estate without ever having to buy any physical property. Anyone who has an account open with a broker can actually buy MBS. And as of right now, two of the best MBSs are iShares MBS Bond ETF and Vanguard Mortgage-Backed Securities ETF. Now, Burry says that there's no buyers for MBS. meaning that investors are looking to stray away from taking part in the loans surrounding real estate. And even just as a few days ago, Burry had tweeted, but since deleted, a shocking relation with Bitcoin and the NASDAQ. Quote, "Are we sure Bitcoin is not just another risk asset of the NASDAQ 100? This tweet was followed with a price chart that shows the comparison between the NASDAQ, an index that tracks 100 of the top US tech stocks, and Bitcoin prices. We can see that they're following virtually the exact same path. Burry is making an argument against many cryptocurrency specialists and stating that Bitcoin and cryptocurrencies in general will end up becoming the next safe haven investment, just like gold has been that way for many years prior. Burry has clearly shown that Bitcoin is moving exactly with tech stocks in the market, and thus showing that it may not be as safe as it seems. There is nothing better than Christmas in July, but unfortunately, on June 24th, 2022, Burry tweeted and deleted now how he expects that Christmas in July is not really going to be a happy one. Q. In 2022, what brings a Christmas in July? A disinflationary overstocked consumer recession at Christmas. Just to be clear here, disinflation is a temporary or slowing of the pace of price inflation. And in other words, it's when life is becoming more expensive, but at a slower rate than previously thought. For example, the price of a cut of steak was increasing at 2% year over year, but the next year, it'll only increase by 1.5. While we can only speculate as to what Burry means, it seems that he's saying that companies are severely over-preparing the amount of products in which consumers will buy them at Christmas time. Since the Fed is increasing rates so aggressively, with the most aggressive by July, then we'll likely see the peak of spending, which is often associated with the Christmas season, in July. Burry likely believes that people will panic at the huge price increases and will stock up on as much as they can now before prices become unbearable, thus following a consumer recession on the following Christmas. An investor's best friend is being able to think for themselves and make factually based choices. And on June 24th, 2022, Burry tweeted but since deleted, quote, "Knowing saves half the battle. Got it? It's not hard. Analyze, think independently, be informed, find the data, and you'll know a lot that no one else does." In this tweet, Burry gives us some of the most important advice an investor can know. At the end of the day, you, the investor, are the one deciding what to do with your money, where it goes, and how much to invest. So, Burry says that the best thing to do is to not take things at face value, but rather to take your time to do your own research. That includes about what Burry says. And if you hear something on the news or you just don't understand something, then take the time to research the topic and understand as much as you can before making a conclusion. If you want to learn more about other opinions on what the market will bring in the future, then be sure to check out our video, David Hunter, How to Prepare for a Stock Market Crash.